In this presentation, we will work a fairly comprehensive example problem focusing in on the revenue accounts, comparing the general fund to the government-wide activities. Recall that the general fund will be using a modified accrual basis and the government-wide activities will be using an accrual basis. So we'll see these transactions being recorded in the two activities, the general fund and then the government-wide activities, and also be comparing and contrasting the modified accrual transactions and the accrual transactions with regards to revenue. First, we'll take a look at the general fund transaction for taxes that are levied. So we have taxes levied. Remember that that's going to be like revenue to the government. So in essence, you could think of this as similar to an invoice being sent out for a for-profit organization. This will be even on the general fund, which is more of a modified accrual, similar to just an accrual type of transaction where we will debit the receivable, in this case, of course, the current receivable, because these are current, and then we're going to credit the allowance for uncollectible current taxes. So we're going to credit the allowance as at this point in time. The allowance is something that we are familiar with, however, with the normal type of accrual accounting. And the difference is going to go to revenue as we would expect. So we got the receivable, we're going to say we're not going to collect some of them, and then the revenue is going to go up with a credit as we would expect. Note this is basically an accrual transaction. Note also that as we, at the end of this problem, for the general fund, we're going to have to account for the fact that we need a modified accrual and adjust these revenue accounts back using this deferred inflow of resources, recording the income statement accounts more on a cash basis, modified accrual, while still keeping the accrual account of the receivable up top. If we record this transaction, we're going to debit the receivables, taking it from 0 up in the debit direction, credit the allowance, which is going to take it up from 0 in the credit to the credit direction, and then revenue is going to go up from 0 up in the credit direction as we would expect. How about the government? Well, this is in essence the same thing because we posted an accrual transaction. So when we think about the government-wide activities, it'll in essence be the same thing. So we will once again have the debit to the taxes receivable current. We're going to credit the allowance, and then we're going to call the revenue account general revenue for the property taxes. We're going to give it a bit more detail in terms of the types of revenue account within the general fund. Posting this out, then the receivable is increasing once again. The allowance is increasing. The difference between the two is what we expect to collect. We are then increasing the revenue account, now being called general revenue for the property taxes. Next item, we're going to say that there's a collection on the property taxes. So once again, general fund, modified accrual, cash is going up, pretty straightforward. We're going to debit cash. The other side, decrease in the receivable. Once again, fairly straightforward type of transaction. Pretty much an accrual-based type of transaction. So we're going to increase the cash, and then we're going to decrease the accrual. So cash went up with a debit. The receivable goes down with a credit, moving it from one asset to another asset. If we look at the government-wide activities, same transaction because once again, it's in essence an accrual basis. So the government-wide is going to be on an accrual basis, debiting cash, crediting the receivable. So there's a debit to cash, credit to the receivable, same type of activity. Then we're going to go to the general fund and say we're going to collect on delinquent taxes and penalties. So now once again, we're collecting money. We're going to increase cash for the sum of the two of them, and then we're going to decrease the related receivables. Only difference here being that we have multiple receivables. The current receivable here, we're collecting on the delinquent receivables and the interest and penalties. Recording this then, cash going up, so we're going to debit the cash. We're going to decrease the receivables, the delinquent receivables, and the interest and penalties respectively. Nothing unusual here. This is in essence an accrual transaction, although we are on the general fund, which is using a modified accrual method. This is going to be the unusual piece, however. We're also going to say a debit to deferred inflows of resources and a credit to revenues. Why? Because you'll recall that in the first transaction we had, we recorded everything on an accrual basis in terms of debiting the receivable and crediting the allowance and then crediting the revenue. At the end of the time period, we're going to reverse the cash portion of that transaction, removing the revenue that we didn't collect in cash, putting the revenue back to a cash basis, not recording the other side, however, to receivables because we want to keep receivables on the books, although it is an accrual basis, and putting the difference to the deferred inflows. So which we're going to say is kind of a liability type of account. It's basically just an account that we had to put there because we're doing this kind of unusual thing between a cash and accrual. Now, in this case, we did that in the last time period too. So that transaction, this 57,700 then represents cash that wasn't received last time period for revenue for last time period. So in essence, we have to record two transactions. We have to record this normal type of transaction to reduce the receivable, but then we also have to reverse out the deferred inflows to take it out of this basically holding account that was holding it so that we didn't record it as revenue but didn't increase the receivable, and now we're going to record the revenue. So we're taking it out of this account. It's going to debit that account, bringing it down, and then we're going to record the revenues at the point of time we received the cash. So this transaction is related to the prior transaction. We received the cash. Now we're recording the revenue on more of a cash basis while keeping an accrual basis on the receivable transactions or on the balance sheet accounts. Then what about the government-wide activity? We're going to have a similar first transaction, of course, which is cash is going up. We're going to decrease the receivables. Same type of activity. Cash goes up. We're going to decrease the receivables for the amounts that were received. However, we don't have the second activity, the second transaction. You'll see that account isn't even here because we're on an accrual basis. We're not doing the funny business of the modified accrual within the government-wide activities. Back to the general fund, we're going to say we imposed interest and penalties now. So we're going to impose interest and penalties. That means we're going to debit a receivable type account, not the current receivables, because by definition it's basically delinquent. They're interest and penalties based on delinquent activities, and we're actually going to make its own account called interest and penalties. So we're going to say that there's an amount that's going to be uncollectible. The difference between the two, the 7,800 and the 6,100, we think is uncollectible. That's 1,700. We'll put that into a related allowance account. And then the difference, we're going to record to revenue. Now remember, if we don't think the revenue is going to be collected at all in the current time period, then we may just put the difference into the deferred inflow of resources because we think it's all going to be collected in the next time period. However, if we still have time to collect on some of these items, we're going to do the same thing as we did with the normal revenue we've recorded up top. We're going to record it into a revenue type of account. And then when we collect, and then we're going to have to adjust at the end of the year for the amount that we didn't collect and reverse the non-cash stuff out of the revenue and put it into this deferred inflow so that we're going to collect it in the next time period. So once again, if this happened at the end of the period, this transaction where we basically assess the interest and penalties, we may just put it into the deferred inflows of resources because we don't expect to collect any cash on it. If we have time to collect cash on it, we may put it into revenue, see how much cash we collect in the current time period, and then reverse out the amount that wasn't collected into the deferred inflows, as we will do with the transaction for the current taxes that we don't collect in cash during this time period. So here's the transaction. We're going to increase with a debit the receivable. So that would make sense. We're going to increase the allowance. That would make sense. That's similar to us basically invoicing a client. And then the credit's going to go to the revenue account, which again, that is what we would basically expect from this transaction. How about the government-wide activity? Well, the same thing. That was in essence an accrual accounting transaction. So we're going to have in essence the same thing. We're going to debit the interest account. We're going to credit the allowance, increasing it, the difference between the two, what we expect to receive, and then the difference is going to go to the revenue account. However, we're going to give it a little bit more detail on the revenue account. General revenues, interest and penalties on delinquent taxes is what we will call it, breaking it out from the general revenues from the property taxes. Back to the general fund, we're going to reclassify uncollectible taxes and interest and penalties. So in essence, we're going to take the information that's at the end of the period. We're imagining end of the period now. We need to take the current amounts and the current receivables and the uncollectibles and take them to the delinquent because now they're past due. So we have this 807 that is not has not been collected. We're going to move it from current to the delinquent. Now note, if you're in practice or in a problem such as this where we are posting the transactions, we have tracked this similar to a GL account or a T account. We know what's in there and we can reverse it exactly. If you're working a book problem where you just have floating journal entries and you're recording all this journal entries in a column without any posting, you're going to have to make a T account in a similar fashion as we've done in this account here. So in practice, or here, of course, we see we've got to this number, this 807. We need to make it 0. We're going to credit it and debit the delinquent account. So I'm going to do this with 2 transactions. You could do it with 1 transaction if you so choose. And then the second transaction is to take everything out of the current allowance account and put it into the delinquent account. And that, of course, is the 135.6. So if we record this, then what we're doing is we're going to take the debit the delinquent, credit the receivable. So here's the receivable going down. We're going to put that into the delinquent like so. And then we're going to remove the uncollectible, making it go down to 0 and putting it into the delinquent. So we, in essence, of course, made the current items, both the receivable and the allowance, 0, moved those balances to the delinquent items down below. As we do that, note the difference between the two here. We've got the 807 minus the 135,600. That's going to be the 671.4. That 671.4 is then the amount that we didn't collect on that is recorded in revenue. So recall that first revenue transaction, we debited the receivable, we credited the allowance, and then we credited the revenue on an accrual basis. But now we're saying it's the end of the time period and we didn't collect this. This stuff is still in the current receivables. It was at 0. We recorded the revenue based on the net value, and now we didn't collect that much. Therefore, we want to make an adjustment to do the modified accrual thing, which is to reduce the revenue account to a cash basis, removing that amount to get it back to a cash basis, not putting the other side to the accrual account, eliminating the receivable, because we want to keep the receivable, therefore making up this other account called Deferred Inflows of Resources. That's what we'll do now. So we're going to say, all right, we're going to debit revenue and credit this deferred inflow of resources. And note that it's actually for 677.5. We're going to do this with 1 journal entry, because if I take that amount and subtract it from, let's say, 6,775, that difference, that 6,100, you'll recall, is the same thing we did with the penalties. We're going to say some of the penalties were not collected, and we recorded the interest and penalties, and we recorded the credit to revenue. So we're going to include the uncollectible amount of the interest that wasn't collected that we increased revenue with to more of a cash basis as well. And that was this transaction up top. This is the government-wide, but it's the same transaction for the general fund. So in essence, this 6,100 we put into revenue and we didn't collect any of it. So we could have just put it directly into the deferred inflows at that point in time, but we instead put it in the revenue. Now we're going to reverse it along with the revenue that we put in with as long with the reversal of the normal revenue and the normal taxes. So if we post this out, then we're going to reverse the revenue. So we're decreasing revenue, very unusual, not something we typically see. Revenue usually only goes up in the credit direction for accrual accounting, but we're going to reverse it to take it back to the cash accounting. We're going to put the other side not to what we would expect to reverse back to a cash basis, which would be the receivable, but put it into this other account that we kind of made up here, which acts kind of like a liability account because it goes up with a credit, and we're going to put it into this account. And so next time period, as we did this time period, we're going to have to, when we collect on this money, we'll debit the cash, we'll credit the receivable, but then we'll also reverse this amount, taking it back out, increasing the revenue in the current time period when the money is received, putting the income statement accounts more on a cash basis, while keeping the balance sheet accounts of the receivables more on an accrual one. Then if we go to the government-wide activity, what's going to happen? Well, we'll do the same reclassification, taking the money out of the current accounts and putting them into the delinquent accounts, but we won't do the second transaction. And you'll note here that we got 135, this should be 6, 135, this should be 6, and this should be 6. This should be going down to 0, so we kind of messed that up a little bit. Hope that doesn't throw you off too much. It should be the exact transaction, taking this amount down to 0 and of course recording the difference into the delinquent account. So bottom line is same type of accrual transaction, which we're just going to be moving the receivables from the current portion to the delinquent. And that we don't see that normally in financial accounting, but we could see that basically makes sense. We're just reclassing the receivable. What's not going to happen is that we're not going to have that second transaction that's going to be removing the amount that was recorded in revenue and putting it into more of a cash basis account. So you'll note we don't even have this account of the deferred inflows of resources in the government-wide activities, because we're not going to be recording that type of transaction. That's only going to be something on the fund accounting, which are going to be on the modified accrual basis, as opposed to the government-wide activities, which is going to be on more of an accrual basis.